What's up, everybody? Last week was a massive week. We had inflation come actually in hot, and now we turn the book and turn the page to this week. We are off on Monday due to President's Day here in America. We do not have anything happening on that day. And just looking throughout this week, we don't really have anything comparable to what we had last week with the Fed talking and obviously inflation coming out hotter than expected. But what we do have is we do have some nice earnings coming up, and we do have a couple economic pieces I want to talk about. In this video today, we're going to be talking about a couple of the economic pieces. We're going to be talking about the companies that are reporting earnings this week, and we're actually going to be looking at each company and what their charts and what the technical analysis says about earnings coming up and where they are potentially going to go before and into and after earnings. So let's get into it. So here we have pulled up, we obviously have our economic calendar here on TradingView. And as you can see, the two biggest things that we have this week is going to be building permits, housing starts, FOMC minutes, and existing home sales. Honestly, I think all of this is just going to be a big fat nothing burger. I'm not really worried about any of the numbers like I was last week. And even though the last week's numbers came in hot on inflation, the market shrugged it off, just like it shrugged off tariff talks, tariff scares. It shrugged off DeepSeek after, obviously crashes with those, and it shrugged off the Fed coming out and nuking the markets in December. So this market clearly wants to go higher, and I'm all for the ride higher. So now let's get into the earnings calendar. So here, as you can see, Monday, obviously after the bell, there is no bell because we are closed Monday. Not really too much I'm looking at. Starting Tuesday before the open, I'm looking at Baidu. Chinese companies have been very hot lately, and we'll get into this chart here in a minute. We're also looking at anet after the close, Oxy after the close, which is Warren Buffett's one of his biggest positions. We're looking at Toll Brothers, and yeah, that's pretty much it for Tuesday that I'm really looking at for bigger names. Wednesday, we're looking at Etsy. We're looking at Solar Edge, and some people care about that. I'm not really a big fan. Fiverr. We're looking at Global E, GLBE. That one's a big one. They compete kind of with Shopify, and Shopify had really killer earnings, so they could come out and have something similar. Wingstop before the bell. Wednesday after the bell, we were looking at Carvana, Toast, Cheesecake Factory, Vale. Before the bell on Thursday, Alibaba, which is going to be massive because Alibaba's been running like crazy. We'll get into that in a minute like we see on the charts. Walmart, Unity, Wayfair, Shake Shack, Mercado Libre after close on Thursday, Rivian, XYZ, Block, which used to be Square, Texas Roadhouse. Things start to heat up, Dropbox, and then things fall off a cliff on Friday before the open. So now that we got that out of the way and we kind of know what we're going to be looking at and the companies that are reporting coming up this week, now we can kind of look at the technical analysis and look at the charts to kind of see where we are going to go potentially. What are the moves that are going to happen after, during, and before earnings? So, like I said, first up, we have Baidu. And Baidu, along with Chinese companies, have been super hot. We called this out January 1st with a video just like this, talking about how China was kind of they just had their largest GDP print in since July of 2023, and I figured that would actually cause a lot of people to become bullish on China, and we were right actually on that. And we did see these large moves in PDD, Pinduoduo, Baidu, and obviously Baba. So with this, we obviously have this support, giant support dating all the way back to 2010 or something like that. I can't really see because I'm in the way. Oh, there we go. 2010, right on the money. And we see that we keep coming down to this area of about $73 up to about $86, and we continuously bounce off this area. And as such, we came right back to this area, and now we are actually forming a double bottom. You see that we came down, touched once, hopped back up, came down again, touched twice. And essentially, what this pattern really tells us is that if we're able to break over this $116 level, then that means we're going to run higher to about, the measured move would probably be about 170-ish area. And so we have very limited downside because we have this beautiful um, support zone dating all the way back to 2010. And obviously, we have this nice little volume shelf. We bounced off the green support beam down here on the Williams percentage range. And now we're moving consistently higher, heading towards our red barrier, in which at that point we can then create a Williams consolidation box in here. And what a Williams consolidation box is, it just essentially tells us that we're going to continue higher while it moves sideways within the confines of the box. If it breaks out of the box, that's not good, and we could see it go lower. Just like as this broke out of the box here, we see it go higher. So Baidu is really setting up for something big with earnings this week. Expected to report $1.97 of EPS and revenue of $4.57 billion. And they've consistently beaten. Again, I don't ever trust Chinese companies with their financial statements and everything like that. They've just proven to not be trustworthy. But at the same time, they're hot and it is what it is, and people are going to react how they react based to the numbers. If the numbers come in really good, then people are going to react bullish, obviously. So we have a double bottom and we have a high five indicator, which is my personal trading strategy that I personally coded. That is flipped green, and we have a nice bullish cross. So at the bare minimum, I think we'll come up and fill this gap up to about 103 before earnings. And then I could see us, if we have good earnings, go up to 117 and possibly break out of that and move higher up to about 160, 170 area. So that's kind of what I'm looking at on Pindu or Baidu. Let's keep moving here. Anet. So Anet is Arista Networks. This company has been flying high since 2022, just continuously, higher lows, continuously tracking and trucking upwards. And now we have come to this point where, we had the Williams consolidation box formed. We broke out of that to the downside. And I keep saying this, and essentially, a train that goes in motion stays in motion. With the Williams consolidation box, what you typically see is when you get up here to the red barrier, when you hit that and you start trekking downward, typically you are going to go all the way down because a train in motion stays in motion. And besides a few times, like here and here and here, majority of the time, we see it go all the way down to 80 or down to the green barrier, as you see. So is this time, are we going to stop here again this time? Or are we going to continue down to negative 80 or down to the green support beam on Arista Networks? If we do continue down, with little pullbacks here and there, all the way down to negative 80 or the green support beam, then essentially that's going to bring us down to about $100 to $92 ish area. And that's just where we kind of consolidated, have previous resistance here, turn that previous resistance into support with this little column of consolidation. And as such, we already came down and wicked off of that. So there's pretty strong support in here. So I couldn't really see it, unless they reported really bad earnings, I couldn't really see it fall below 93 to $102 unless it was just a very quick move due to earnings. So that's kind of what I'm seeing. I can see them, report really good earnings and then just go back higher and continue uptrending, just like we saw here. Or I could see, earnings be meh or good, but not good enough, and then see us go down to this dip buy box of $93 to $102. Their expected EPS of 57 cents and $1.9 billion in revenue. So we will see if they come in and beat that. I know that some of the guidance of these bigger semi companies and tech companies have been a little light, and Wall Street really hasn't been liking that. So they could come in and double beat like they've consistently been doing. But if their guidance is kind of shaky, not that great, or they're spending a lot on CapEx, then we could see a big move down. Just my honest opinion from what I'm seeing on, obviously, all the different earnings that we have been seeing. Oxy, not going to lie, it doesn't look the greatest. It's in this downtrend. Oil is not doing that great. They're expected to report on Tuesday, like I said, after the bell for 68 cents and $6.98 billion of revenue. If we go down to the daily chart, we can see things a little bit better. We do have a nice symmetrical triangle pattern forming here. We are down here at the lower levels of that, and we are kind of uptrending out of that bottom. We do have a high five indicator that's green and trying to make this bullish cross upward. And again, a train that goes in motion stays in motion. We have hit this green barrier down here and continue to uptrend out of that green barrier and towards the red barrier up here. Don't have the lines drawn, but you understand what I'm saying. So if we were able to have really good earnings on Tuesday and continue higher and to break out of this symmetrical triangle pattern, we would then most likely launch over this $52 area. And then we would start, obviously not in a straight line, but we would start uptrending due to those good earnings. And as long as things stay good for oil overall, we could see us uptrend up to $56 and $62. I know this is a very, very big position for Warren Buffett, greatest of all time, the GOAT of investing. So I'm sure he has a plan, and they are, towards this lower end, dating back to 2022. So they haven't been this low in a very long time, multiple years. If we do break down, then we have support down here from 43 down to $38 ish. Moving on, we have Toll Brothers up next. Toll Brothers, they basically are a home builder of, homes that are $1 million or more, and they basically build your luxury home for you. And which luxury, I don't know where you are, like $1 million now in some places obviously isn't luxury anymore. It's like just building another normal house. If you're like in New York or somewhere else really expensive like Boston or something like that, it's $1 million not going to get you, luxury home. I would say so myself. Some places it will. But Toll Brothers, if you can see here, we have a nice little volume shelf here, and we are at the bottom of the Williams percentage range, hitting the green barrier. And you see the last couple of times we hit this green barrier, what happened? Well, we started uptrending. We saw bullish divergence like we're seeing here. Bullish divergence is essentially just kind of making higher lows in an upward trajectory. Like it's falling down, but now we're making higher lows in the bullish upward trajectory. And that typically starts leading towards a move higher. You see, we wicked off once, twice, this kind of like little box area here of key support and resistance zone. And, if we come out with good earnings and they show that things are really good and they continuously keep on having orders on tap and things are going smoothly, then we could see this flip and go back up to the upside, back to all-time highs. It has been beaten down a little bit just because really interest rates have not been falling down in the housing market, and that's probably the biggest reason for this company starting to fall off a cliff a little bit here. But I can also say to the bearish side, if they report meh earnings or things are perceived to start showing cracks in the housing market, I could see us easily have just formed essentially a head and shoulders pattern, and then obviously a breakdown of 110 area would send us back down to this previous resistance turned into support down at about $85. So just remember with these housing companies, and these home builders, they are very, very cyclical, and they run hot and then they run very cold. So just be aware of that. But again, if we do see good earnings with this divergence, I could see them flip and start moving higher on the weekly, get back up here to up to the red barrier and have this nice bullish run back up to all-time highs. Moving on, we see Etsy just completely fell off a cliff. We are back at levels we haven't seen since um 2018. Absolutely crazy. We are almost at COVID lows, and honestly, this is just a hard one to tell where we're going. They're on a 4-game losing streak. They're on a 4-game losing streak with earnings. If they lose again, they will most likely see COVID lows down here at about $30 per share. It would be very, very difficult for them to break through $30 per share in my mind. So I could see, again, if they don't have bad earnings, kind of this area from let's just call it $60 down to about $40. $40 to $60 is like your consolidation area that they're going to need to consolidate, get their business back on track, and then make that move higher if possible, if their business really starts to turn around. Um, not really able to chart this name just because of those reasons, and not really seeing anything. A downtrend is the downtrend, and trying to pick whenever you're going to break out of that downtrend is very difficult to do. As you see, the high five flips green, right? But then it snaps right back down to red. It's flipping green, might snap right back down to red. So I would not personally be playing this game, playing this name into earnings whatsoever. Fiverr, a darling in the last Trump era in 2021, 2022, had a massive move up to $336, and now it has fallen to $33.36. That is absolutely crazy. $333 essentially, all the way down to $33. Now, this base is forming like this is a very large base, way larger than the last base. And you know what they say, the larger the base, the higher the space. And so they are continuously beating earnings, but clearly things are not as rosy and the growth rates are not as great as they were. But with that being said, we are uptrending a bit in on the Williams percentage range. You see, we came out of this and we were uptrending in this uptrending bullish channel. We actually have this cup and handle forming down here. And if we do break out over about $37 ish, we could see a nice move and this name actually start getting some love again. Pretty cool company. I've used Fiverr for a couple things in my for either building stuff out for me, Discords or whatever it may be. Pretty cool stuff. I like being able to hire people to take care of some projects for me. So really cool business model, and I like what they do as a service. As a company, I don't know them too well and their financials, but things are starting to look maybe like they're coming out of this bottom at $19 and starting to move up and starting to turn things around. Continuing on, I already had this one actually charted. We are in a Williams consolidation box, which says we are going to continuously go higher as long as this Williams consolidation box stays built and formed and continuing sideways within those confounds. And we have a beautiful cup and handle pattern that we already broke out of. Then we formed a nice little like falling wedge or bull flag, and then we broke out of that as well. So really, our profit target for this is $65, and then our measured move is up to about $80 for this cup and handle pattern. I'm not playing this name at all because it's already run so much, and I like to be early on names and when they're just breaking out or retesting their breakouts, and not really whenever they've already run. What is that? Like 32%. I'm good. But if you are in this name, these are your profit targets, 65 and 80, and just be careful going into earnings. This could just wreck everything and cause this name to fall back down to $47.69, $48 area, back to retest that breakout of that cup and handle pattern. If that did happen, then I would start getting interested in possibly trading this name. Next up, we have Wingstop, and we have a 1, 2, 3, 4. Basically, this is 4 right here. Sorry, this fall down is 4, and then we'll base out again, and that's going to be 5. So double top here. Name was very overvalued. It was a growth name. Everybody loved it. It was very overvalued, in my opinion. And this fall from grace was eventually going to happen like it did. And now we see that, we're clearly in a downtrend here. We're clearly we bounced off this 265 support. This could be bottom. We are breaking out of the Williams consolidation box. We could be done and continue to go higher now and kind of climb back up to 345 ish. Or if they don't report good earnings again, like they did last quarter, then we could see this name fall down to this $200 level. And that's honestly, personally, where I have fair value of this company at based on their free cash flow and based on their metrics. So they're expected to report 87 cents of EPS and $165.1 million in revenue. $161.1 million in revenue in one quarter, and this is a almost $9 billion market cap. And up here was clearly a 18, almost $20 billion market cap. For that kind of revenue growth, they must have had really crazy growth, but that must be slowing. Just my guess at it without knowing the company or looking into it more. Carvana is absolutely crazy if you got in at it at $5.17 because now it's at $285. What a massive, 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 um, just multi-bagger for anybody that got into this name. You're up thousands of percent, and that's wild to me. Good on you if you're in Carvana from down here, even below $100. If you're in Carvana, you already almost 3 extra money. Absolutely crazy. And you see, we just had this beautiful rounded bottom, and we actually are forming this cup and handle pattern, and we're actually about to break out of that now too. So if that does break out, we could go to $500 on this name, which is actually crazy. They're expected to report 31 cents of EPS, so they're a positive company now. Last I saw, they were not, and now $3.34 billion in revenue. So this name's clearly hot, and they're clearly doing something right because every earnings, whether they miss this one or these ones, they are continuously going up for the most part. I will say they have ran a lot. They dumped and then they ran a lot into this earnings call. So, things are going to have to be really, really rosy for them to continue to run, because when you run into earnings calls, those can be setups for disaster. You run so much into earnings and then things aren't as rosy or things are already priced in, then you could see a large pullback. So, just something to be aware of. Toast, also a nice cup and handle pattern about to break out here. If we get good earnings, we break out over $45, then we're probably going back to all-time highs of $70 plus on this name. And but I will say again, when we hit this red barrier up here, when we start downtrending, we typically go all the way down to 80 or down to the green barrier. Just call that the green barrier right there. So typically when we hit up here, we start downtrending or uptrending. We go all the way up, all the way down, 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 so on and so forth. You kind of see how it plays out. So now that we kind of hit up here and now we're downtrending, even though we had this snapback, it looks like we will continue to downtrend here and at least get to negative 80 or down here to um, the green barrier. But I could be wrong, and we could just snap right back up. But typically, it doesn't play out like that. Typically, when you get the train in motion, it goes all the way to the next station. Baba, looking beautiful. Very hot name, though. I honestly don't want to get into this name unless we get some sort of a pullback off earnings. I would look for a pullback down here to about 115 to about 119 area. And then we have nice profit targets up to 134, 150, and a measured move of this inverse head and shoulders all the way up to $171 per share. And obviously, you see, we broke out of this bearish Williams consolidation box. We climbed all the way up here, and now we are forming this beautiful Williams consolidation box, this bullish one. And as long as we stay in those confines, even though we'll have little pullbacks, we will continue higher. So I'm eyeing, like I said, 118, 119, 115 ish for an entry into this name off the pullback. Walmart is just absolutely crazy right now. We were actually talking about that name the other day. And yeah, it's actually bonkers. This 9 EMA, which is also the high 5 indicator, is just continuously bouncing off of that and moving higher. This is a beautiful Williams consolidation box. You could have gotten this down here, followed this Williams consolidation box strategy that I made up, and had this bullish cross on this Williams on this high 5 indicator, and just rode this thing from 52 all the way up to 104. Absolutely crazy. They're expected to report 65 cents in EPS and $180 billion dollars, $180 billion of revenue, which is absolutely insane. Walmart's really met the challenge of Amazon by Walmart Plus. Me and my wife actually use Walmart Plus, and we think it's great. We got 2 young boys, and very, very busy, and it's very hard to get out and go to the grocery store, drag the kids along, and do that whole thing. So having Walmart just deliver it right to our doorstep, man, that's something great. So they have a subscription model now, which is obviously really awesome, and yeah, we are really enjoying that service. And this name is really enjoying, if you're in this name as an investment or a trade, you're really enjoying this name to the upside. So congratulations on that. Killing it. Not really much to say. If we do get a pullback, it'd probably be around $96 due to this previous resistance. and then break out of that. So you're probably looking at $89 to about $96 is your pullback area if they do have earnings not that great or things are already priced in. Unity Software, if we look at this name, it's just again, nothing to really say about this name, guys. If you look at it here, it's just in this massive, massive downtrend. And until we really get some momentum, yes, they're beating earnings, but they're just continuously going down. That means there's things wrong in the business. They're not growing like they should. They're not at their valuation more than likely. Again, I haven't looked into them, but things are just not going that great. They're at this nice volume shelf, but they do have a gap down to $16 ish. So if they do have bad earnings or something, you could see a retest down here about $14 to $17 and see a retest down here about down to the green support beam before we bounce higher. Not really else much to say on this name. They're expected to report 15 cents of EPS and $432.5 million in revenue. Shake Shack. This is a hot name with newer generations. They love Shake Shack. It's like their Chipotle is what I've heard. Beautiful cup and handle pattern here forming. So you have your cup, you have your handle forming now. So as long as they continue up and then break out of this area about 140, they will have a massive move, probably about north of $200 per share. And it's actually setting up really nice that they've had this pullback going into earnings because they've consistently beaten earnings. And, they beat earnings again, and then they can kind of, curl and turn this ship around and start moving higher again. You could see something very nice play out. You see the last few times that we were down here at this at this green support beam, right? And again, I'll draw it real quick. Every time we were down here at this green support beam, you get these massive spikes up. So when a train goes in motion, it stays in motion, right? So typically when you get this, you are getting this move all the way higher. And that's just how it's been these past few times that we get down here. So what better setup than earnings to have that move higher if they do come in and knock some socks off into earnings. So definitely a name that I'm actually going to bring over here to my trades and trading watch list, just because that's a really nice setup. And if we do get that turnaround, I like to be early. And I'll be looking for the high five indicator to go from red to green and see us uptrend and break out of this and hit some profit targets. Next up here, we got Melly. Melly actually has this rounded bottom, kind of call it cup and handle, I guess. Just this little cup and then a little handle, almost breaking out over this, missed, hit, missed, and who knows what they're going to do now. If they do what they did last February, they're going to miss, and wow, that was a big miss on EPS. They're expected $7.90 of EPS and then $5.82 billion in revenue. They are up here at the upper echelon, so if they can just form a Williams consolidation box, they can continue sideways while they move higher. And I'm going to add this one to the watch list as well. I know a lot of people are very invested in this name and call it the Amazon of the South America. And let's see. There we go. So, yeah, definitely could be something really big if we are able to break out of this cup and handle. We are green on the high five indicator. And like I said, the Williams percentage range is going bullish. So things look good as long as they come in with good earnings. I'm not going to get into it before earnings, but if they break out, come back, retest, then I can look at making an entry. Next up, we have Rivian, obviously a competitor to Tesla. I'm not gonna lie, this does not look good. For the very reason that we have not broken out of this falling wedge. We have not broken out of this inverse head and shoulders yet, so we cannot realize these profit targets. We are at a massive volume shelf, but here's the thing: either this is support that we've already created here. Either this is a good trend line and support, or what I actually believe, because a train in motion stays in motion. Look at every time we've come down to the green support beam. We come down to the green support beam and we get up here to the red barrier, or we get up to like -20, very close to it, right? When we get up here and we start down trekking, right? I guess this time we snap back, but then we ended up going down anyways. So we go all the way down, not in a straight line. Sometimes this one's a straight line, all the way down. And here we are. So 1, 2, 3, 4 times that we hit this and started going down. I guess I'll say 4 out of 5 because this one snapped back up. We'll give that one. So 4 out of 5 times when we start going down, we go all the way down. Is this time going to be 4 of 6, right? And then this is not the time we go back up here because they have really good earnings. Obviously, they have really good earnings. Then yeah, it'll probably go back up here. But if they don't, they're definitely going down here to -80 or down to the green barrier or the green support beam. And they've had 4, consistent losses in a row, misses in a row. So yeah, they really need to come in and have good earnings, or they will be going down here, probably about to the $10-ish level. They are expected to report -69 cents of EPS and $1.39 billion of revenue. So we'll see how they come out. They come out on top or come out on the bottom on February 20th, Thursday after the bell. 3 more here, and stay tuned for Texas Roadhouse because that one's actually crazy, the chart. So we have, and if you're enjoying this, guys, if you enjoy this type of content, these weekly previews, really appreciate, a like, a follow, subscribe, whatever you're watching this on, I would really appreciate that. It takes a lot of work to put these videos together, and yeah, I'm happy to, obviously, and I hope you really enjoy them. And if you think I earned a like or subscribe or follow, definitely do that. If not, then it's okay. I understand. No biggie at all. But if you are enjoying it, drop a comment below that you appreciate these videos. That way I know that I can keep doing them if you are enjoying them and do appreciate them. XYZ is blockchain, used to be called Square. They keep changing their name. I can already tell you, uh, I I played this name with his inverse head and shoulders. It died on us. It rolled over. It's right on the high 5. We have a massive volume shelf down here. We broke out. We kind of retested, I guess, but we could go back down here. It could look like something like this, and then there you go. I don't know. Honestly, none of it really looks good. I'll remove all the drawings. Um, the inverse head and shoulders, I guess, could still be in play here. Oops. I guess that could still be in play, and then we could move higher. But the one thing I'll say is that, again, they hit this. They are at 80, so they are at -80. They could bounce here, and that would be totally fine. Or they could go down here and fully complete the falling knife down to the green support barrier, like they did all these other times, right? And all these other times, they never bounced at 80. They always went down to the very bottom of the green barrier. So 1, 2, 3, 4, 5, 6. 6 for 6. So is this going to be 7 for 7? They go all the way down to the green barrier. I say probably, because the train in motion stays in motion, and I go with probabilities. If all the probabilities keep telling me it keeps happening, then I think it's probably going to happen again, honestly. And that means we would break down out of this, and that means we'd most likely be going down to about $70 to $75 area before we would maybe move any higher. But again, if they come in with good earnings, then this could be that one time that happens and they move higher. We will see. Booking holdings, nice little falling wedge pattern here. We are actually flipping and rolling up and about to flip green on the high 5 indicator, and we're about to make a bullish cross. Good thing here is we already hit -80, and you can obviously see that could be good enough, right? Typically we go down to the green support beam, but with this scenario, we did fall a lot, and now we could be making that uptrend higher. Expedia already reported earnings, and they had really, really good earnings. So this could be a name that also has really good earnings in the vacation booking online services space. Expected to report $35.92 of EPS and $5.18 billion in revenue. And again, they're breaking out of this falling wedge pattern, and we could see them move back to all-time highs above $5,400 per share. Lastly, Texas Roadhouse. This name has just went ballistic since 2023, 2020, and basically beginning of 2024. Just absolutely went ballistic for 127% in returns. So, and here we go again. Had a nice breather, had a nice big pullback, and you see where it pulled back to. Previous resistance will always, for the most part, come back and be retested. This was resistance. We broke that resistance, and now we have to come back and retest that resistance to flip it into support. Once we flip it into support, then we can then move higher. And it kind of correlates with where we are right now. If you look at this, we're right down here at the green barrier. We actually have this nice bullish divergence, again, just a higher low. And we're kind of climbing out, kind of in a Williams consolidation box here. But if they come in with good earnings, which they missed last earnings, if they come in with good earnings and wow people again, then you will start to see this name curling and going back up here to the red barrier. And that would perfectly mean that, hey, guess what? This once resistance is now support. And now we have that support for a later date. And then once we break this resistance, we'll come back and retest that, right? Retest that, flip that into from resistance to support, and then continue higher. How the way these things work. So, yeah, it's what I see. 164 EPS is expected and $1.41 billion in revenue is expected. I love Texas Roadhouse, love taking the family there. Great business model, good food for pretty cheap steaks that are pretty good. So, solid company. Looks like they're about to probably move higher again after this consolidation and a little bit of a pullback, but again, just depends on earnings. If they don't come through on earnings, then it's not going to be good. So, that is everything. I really appreciate if you stayed to the end of this video. Again, if you enjoy these types of videos, let me know in the comments below so I know to keep making these videos. If no one wants these videos, then I'm not going to make these videos, obviously. These weekly previews are really, really key in my eyes, and just talking about, the earnings that are coming up, if it's earnings season, or just overall where the markets are going. I really enjoy doing them, and I hope that you enjoy them too. So, appreciate you all. Love you all. Hope you're having a great long weekend. I hope you enjoy the long weekend and a nice day off from the markets on Monday as well. And if you're in America, hope you have the day off on Monday so you don't have to go to work. Appreciate all of you. I'll catch you in the next one. Smash that like button. Follow for more. I'll catch you in the next one. Have a great day.